Life insurance. Who needs it? Do you need it? Find out today on Friends Talk Financial Planning. Hi, I'm Bridget Sullivan Ramel, and I've got a fee only financial planning practice in Chicago, Illinois.
And I'm John Shear. I have a fee only financial planning practice in Middleton, Wisconsin.
John, I'm really excited that you're willing to talk about this today because you've got decades of experience in the financial planning and insurance industries. And so you're drawing on like more experience than most people ever have with life insurance. So I'm wondering what you tell people who needs life insurance.
Yeah, that's a great question to start with. I want to take just 1 minute and point out that not too often do you hear I'm excited to talk about life insurance. Right? Like, oh, I want to point that out that this is going to be an exciting episode here. But it's a great question that people think, certainly the insurance agents, everybody needs to have life insurance. Why don't you have any life insurance? Get more, right? And before we even get into the idea of, well, how much do you need and how do you buy it? It's, well, listen, do you need it in the first place, right? That's a
Right.
really important question. And so what I tell people, it's just sort of boil it down to there's two types of people that need to have insurance, and it's if you love somebody or if you owe somebody, right? Like those are the two places. And so what that means, what that kind of pithy saying means to me is, if you love somebody, I've got a family and they're responsible, they're relying on my income to to live. So typically it's a couple or a person that has children, right? They need you to rely on, or if there's a stay-at-home spouse and one person working, right? You need to protect that person's income. So that's the if you love somebody part, meaning that if they're relying on your income. And then the other one is if you owe somebody, and that means typically if you have, for many people, it's the mortgage or other things where, listen, if something bad happens to me, I want to have that debt paid off, or maybe they want to have that debt paid off, so they require me to have insurance. And so those are the two places, and of course, there's more details when it comes down to those things. But that's really at the end of the day, it's if you love somebody or owe somebody, you probably need to have life insurance. So
That's a real pithy, interesting take. I'm interested in so it seems to me that um, people, when they have kids, a lot of times in the whole excitement of having kids, they miss this important detail that this before they might not have needed life insurance at all.
hmm hmm well, and
Not that they didn't love their spouse. They loved their spouse, but their spouse would have been fine without, financially
yeah,
without it.
and
But then the child is born and then, or adopted, and it goes from, it goes into like a pretty strong need category.
the need, that's exactly it. And if you think about it, when if you're say married or have a partner and no children, um both if both people are working, you say, well, listen, if I'm not around, I'm not costing money, right? And so my partner can continue to work and have her income. So it becomes that love thing is not okay.
Right,
That's a funny way to think about it, right? But it's, is somebody else relying on my income to
right,
make their life, right? And so if and so you might have a situation with no kids involved, and one person, you know, she's a physician making a high income, he's a teacher making a lower income. If
right,
something happens and she's in a car accident, uh, boy, he might have a hard time keeping the house, right? So you
right.
go, oh yeah, we're both in. As opposed to if both people are school teachers or something like this, where hey, we can live on our own income. So there are some nuances when it comes to that, right? And need to think about, as with all the things we talk about, there are some guidelines, some ways to think about things, but it also is specific on your situation. And
Well, it's
yeah,
really interesting, yeah, because we get into the like so parents with kids that are dependent on them. I would say almost 100% of the time, I would tell them they need life insurance.
almost without question. I can't
Yeah,
imagine a
there's
third, right?
yeah, very rare cases where I would say they don't.
Yeah.
Then we get into the okay. Then what? If for me, I look at it as like discretionary. This is getting compared to other household expenses. Like, yeah, gee, it would be nice if spouse A dies. The other would, feel bereaved and get a bunch of money. And that would certainly help them. But it's not like they couldn't carry on. Or the great example that you had, which I've got that example too, like really uneven incomes. So the question of like, all right, what do you do about the house, and what do you do about this like overall lifestyle that we've gotten to? You don't typically want the other person to just really have to downgrade just
Right.
because one person dies. That's not what you're really going for. So yeah, that's another good example of where it's not the same as when you've got kids.
Yeah.
But it's also not the same as like, okay, we're empty nesters. We're both, 5 years from retirement. But gee whiz, if one person died and the other got a bonus, that would certainly cushion the nest. It's not like you got no nest.
Yeah.
It's like a bird nest. Yeah, like
Well,
you don't want
one
you
thing
want
that I
to
can
be able to
say,
add some cushioning. Not it's
yeah,
not like
yeah.
the person's going to be out, left out in the cold.
Right, right. I mean, taking care of that person, right? Kind of goes back to that idea of hey, if you the love versus oh sort of thing. But one thing to keep in mind, I think, when people talk about hey, who needs insurance, and sometimes we'll have folks and they say, as an example, geez, my house is all paid off already, so if I die, my spouse is taken care of, and she can raise the kids, or he's going to be fine on his own. And one thing to keep in mind is that economically that might be true, but we're not talking about that. Your tree in the front yard fell down and you can replace it, right? I mean, this
Right.
is your life partner and the parent of your children, and it's there's more to it than just the economics, also, right?
Right. So it's a
Yeah,
whammy for sure. It's a
yeah,
major setback if your spouse passes away. And the other thing is that I think that people can underplay how much work around that, how much work the spouse actually does, and you kind of need to replace that.
yeah,
So if the spouse is helping you raise kids, obviously you're going to need to replace that. But even if you've got a house and one person dies, if the person's pretty motivated, like motivated to be keeping up the house, etc. Again, that gets to your point is uh you're the person who survives is going to be operating at probably less capacity,
right,
often, not
yeah.
always, but often. And so money helps make up for that.
Yeah, that emotional impact is not something to be factored in, right? A lot of people think about, oh, here's the numbers, but think
Right.
about that personal side of it. And maybe just to circle or close the loop on things and come to a conclusion here. One group of people that doesn't need insurance are typically children, or if you don't, if you're single and don't have anybody that's responsible for you, that's the insurance agents. Um, it can make there's a case to be made for that, but it's really rare instances that it's a good idea to buy insurance on children, just in general. So that's one that we see in our practice quite a bit, where it's not necessarily wrong, but boy,
Right.
there's usually other places that are better spots to put your money. So
One other thing I've seen a lot is people without kids and, without a house. And then the insurance agent will say, yeah, but it's cheaper now than it will be later. You might not even be able to get it later.
there's
What are
yeah,
your thoughts on that?
yeah, there's something to be said. That's not wrong. However, in most cases, you take a look at, and we'll talk in a future episode on like what to buy and how
Right.
to do that. But buying it as a 25-year-old or a 30-year-old in anticipation of future events, that's not unreasonable. We'll talk about that. But buying it as a parent on your baby or your young child to protect the future insurability, it just usually doesn't work out the way that it's promised.
Right.
So, from that
I,
instance, it sounds like a great idea and it sounds like you want to be responsible, but you're better off usually spending that money on buying more insurance for you as a parent.
okay, great.
So,
So thanks so much for all this great information, John. And I just want to say two things at the end. First, both John and I are members of ACP, or the Alliance of Comprehensive Planners, which is a not-for-profit group of planners that operate all around the country. And so if you like kind of how we approach things, there and you're interested, you can check out acplanners.org. The second thing is subscribe. If subscribing to our YouTube channel helps us with YouTube credibility and helps other people find
Other
us.
people find us. That's right.
So great. With that, thanks, John.
All right. Thanks, Bridget.